So on August 1st, Bitcoin is splitting. So you're going to have two coins. Most of the miners are signaling for SegWit. The miners that are not signaling for SegWit are going to branch off and create their own coin called Bitcoin Cash. So if you have Bitcoin, or any of you guys have Bitcoin, on August 1st, you will have, like, say you have 10 Bitcoin, you will have 10 Bitcoin, you'll have 10 Bitcoin Cash. Currently, there's one exchange that is trading Bitcoin Cash.
What's the name of it?
Via BTC.
Via BTC.
Yeah, VIA BTC. A smaller exchange, but a Chinese exchange. I would not keep your money in CoinBase. You want to be careful who you listen to sometimes, because I think that a lot of people in traditional media outlets really don't have a real in-depth understanding of what's going on, and they kind of inject fear. I mean, forks are very common. You've seen Ethereum Classic. That was a very, Ethereum is the second largest cryptocurrency. I'm trying not to make it too complex, but you have soft forks and you have hard forks. So what we're talking about is a hard fork. There's several exchanges that are supporting Bitcoin Cash. And you can actually Google it. I would recommend, if you have Bitcoin, to Google the exchanges that are supporting Bitcoin Cash. If you had it offline, you had it in storage. When you have it offline in storage, you have keys. You have your private keys. Ledger is probably one of the most popular ones, like little USB drives. Trezor is another one. There's several companies. Essentially, you're putting it on like a USB because you can print out a piece of paper too. If you have your private keys, you need to go somewhere that is going to accept those private keys and essentially accept Bitcoin Cash. Kind of flexible. I mean, you see some people have it like wearing it like a necklace. I want to make a big point here. So you're talking about you wouldn't lose your Bitcoin. What you would lose is you would lose your ability to get Bitcoin Cash. So you would lose the ability to get free money. Bitcoin Cash is essentially going to be Bitcoin Classic.
The Bitcoin that we have right now is going to be Bitcoin Classic?
No.
It's going to be Bitcoin.
So do you think that they will be safe there?
I would Google and see if they're supporting it, because pretty much every exchange is going to give their statement on how they're going to treat this transaction. When I first got into trading cryptocurrency, I really started with many, not necessarily Bitcoin, but all of the smaller altcoins: Ethereum, Litecoin, Ripple, Dash, Monero. During those times, the market has really evolves and changes all the time. There's all kinds of different trends that happen. It's actually exciting for a trader, because it opens up really so many different avenues for opportunity. The newer trend, it's not necessarily new, but the trend we've been seeing is just more of an increase in automated trading in these exchanges, because there's thousands of exchanges in the cryptocurrency world. The big trend that we saw around March or April of this year is we saw just a dramatic rise in volume and a dramatic rise in the prices of all of the different altcoins, all the smaller coins, not necessarily Bitcoin. Has anyone been watching the price of Bitcoin? I mean, the price of Bitcoin today has gone up 5-6%. Bitcoin is one cryptocurrency. I mean, I don't necessarily, I'm not the biggest person to actually hold Bitcoin, because as money, it's actually not, it's not the greatest way to transact. Ethereum and Litecoin are way better, because they're faster. But currently, since we've seen a huge shift with volumes in different currencies, we've seen a lot more automated trading, bot trading. There's a lot of the different bots, or this volatility software that we're seeing that has been entering the markets. It's really piggybacking off of Forex algorithms, different patterns that we've seen in Forex markets. So there's a couple different strategies that we've actually been employing recently that have been doing pretty well, and I'm going to bring up a little bit of a graph to kind of explain that. So this is what's called Aroon. So this is Aroon indicator. This was actually developed in 1995 for Forex markets. This is just kind of a rough infograph, and this is what you'll see in cryptocurrency markets. You'll see a lot of volatility. You'll see prices come up, you'll see them come down, you'll see just a lot of different trends. This line right here is represented with volume of trading, so the number of traders. So you see these spikes, you'll see more volume. So what the Aroon indicator is you have two different indicators. So it's looking for the high and the low based on a time period from the past. So these lines right here would be the Aroon indicators. So kind of, this is a rough estimate here, but as you can see, when you see, essentially a price rise, you'll see a little bit of a switch in these indicators. So there's three different aspects that you want to be aware of. So when the lines are running parallel, when they cross over each other, and once they reach a 30 to 70% threshold that's kind of roughly in the middle. So when these two lines cross each other, it doesn't necessarily mean that there's going to be, that's going to be the time to buy or sell, but it does indicate a trend reversal from a bearish market to a bullish market and vice versa. The way these indicators work is they're taking time period from the past, and it's basically taking highs and lows and it's putting it on a scale, and the closer those scales are to one another is how these lines are going to be trending against each other. It's very technical, so I know it's for a lot of people it's like, whew. But the Aroon indicator, to try to make it simple for a lot of you guys, it's going to give us an indicator on a bearish market or a bullish market. So that gives us information on where we feel like the market's going to go, but it also needs to be backed up by volume. So we may have a bearish or bullish market, but if there's no volume behind that, there's no liquidity, it might not necessarily be the best buy or sell indicator. So we can do this two ways. Is we can actually automate this through the bot, and the bot uses algorithms, mathematical algorithms, to give us an indicator, and it's going to basically go into the market and trade on those indicators. The other way that we can use this is we can do it manually, not necessarily using the bots. And this may be if we have, say, an exchange that we can't necessarily hook up some of this automated software to, but we still see opportunity. We've seen in the last year, basically in the last year, we've seen a lot of companies that have been starting to develop platforms, much like the platform that we're building here. Once you have a working model and you have some automated software that's actually that's working. So this is one indicator, and this gives us, this is actually it's a pretty good one to give us a little bit of an idea of where we feel a certain pair is going to go. But the other thing to consider is when this is applied in the Forex markets, it's typically the U.S. dollar, maybe a company. Now what we're seeing is this is actually being applied to cryptocurrency pairs. So Bitcoin US dollar is the primary one. Ethereum being the second most popular cryptocurrency. There's a lot of cryptocurrency pairs with Ethereum, with Litecoin, with Dogecoin.